Hello and good morning. This is Paige Grillo with Weiss Financial Ratings, and I am coming to you today from my living room in New York. I was scheduled to be out in the Chicagoland area this week to be doing patron presentations, and because of the coronavirus, I was grounded and can't be with you this week, but I wanted to make sure that we did get some information to you to help you out with protecting your piggy bank and like to just get started here. So just wanted to put this up here. It's a picture of me. I'm the one in the blue shirt, and I am an account manager with Weiss Financial Ratings. I am not a financial expert. I don't have any specific insight into investments and financial matters. I am qualified to tell you about the database and how it can help you to manage your financial future and protect your assets. So the Weiss Financial Ratings and Gray House Publishing, we're independent, unbiased, and accurate. And we're here to help you navigate your finances and direct you toward financially secure banks, credit unions, and insurance companies. So the database that your library subscribes to gives you financial strength and safety ratings for banks, credit unions, and insurance companies. And the way we rate them is very simple, similar to grades that you would get in school: A, B, C, D, and E. And as you can see, A and B are excellent and good. C is fair. D and E, weak and very weak. So banks and credit unions, you can find out the financial strength of your current bank or credit union. You can locate the most financially secure bank or credit union in your area. So you may want to just take a look. If you call up your bank or credit union on the database and see maybe that they have a strength rating that's a little lower than you feel comfortable with, then you can certainly do a search and find something in your area that you would feel more secure having your money with. It helps you avoid the hassle of dealing with a failing bank or credit union, and it helps you make sure that your money is safe. So we recommend that you do a little checkup on these things, maybe once a year. Just log in and pull up your bank or credit union and take a look and see where they are. Same thing with insurance companies. You can find out the financial strength of the insurance companies that you're doing business with, whether it's somebody's got your homeowner's insurance, renter's insurance, or car insurance, maybe your health insurance. You can use it to locate the most financially secure insurance companies for your specific needs. So you're able to look up health, property and casualty, auto insurance, things like that. So whatever you need, you could find. So make sure that your insurance company will be there for you when you need them years down the road. You certainly don't want to be giving them your premium money month after month, year after year, and then find out that they're not going to be there for you. Also, you have access to the Medigap tool, which helps you with Medicare supplement insurance. It will walk you through the supplement insurance decision-making process, describes all of those supplemental insurance plans, also known as Medigap plans, helps you pick the right plan for your unique healthcare needs. And with that, you can find the price that each insurer is going to charge you for that plan. You can also, based on all the information that is presented, find the one with the most coverage that you need at the best price that fits your budget. So let's get started. We're going to jump off of here and go out to the Villa Park website. Of course. I lost it. I'm gonna. Okay, here we go. I was having a little technical difficulty. So here's the Villa Park website. You want to click on research and then drop down to this digital reference. And we're going to scroll here. Just click on this plus sign and all of the business related digital reference things are here. And here you have the financial rating series. So I just want to point this out, this where it says view video tutorial. Your library subscribes to something called Niche Academy, and I think I can get out here. Yep. And they produce a number of, and I'm not going to be able to see it. All right. Oh, there it is. It's loading. A number of tutorial videos that walk you through the database and give you a lot of precise information of doing different things, creating an account, walks you through the financial literacy tools, the safety ratings, MEDICARE, investment ratings. I don't think you all subscribe to that, so that unfortunately isn't available to you. You could certainly take a look at it. But at any rate, you have this great tool available to you as well. But we're just going to jump back here, close this. And I'm going to click here. I'm not going to be able to get into the database from here because I am not a card holder at the Villa Park library. So here this screen comes up, and I'm sure you all know what this means, but basically you have a username and a password or a PIN number that you would put in these spots. So I am going to jump back to our presentation here real quick. So once you're in, you can take care of that. You are able to do this. You can log in at the library, although not right now since the library is closed. But once they open again, you can log in at the library, or you can do this at home with your library card, and that's where that PIN number and the barcode come up. So there's different ways to search once you get into the database. If you know exactly what you're searching for, you could type it right in up here. If you wanted to search by topic, say by credit union or bank or insurance company, you could certainly do it by that, by selecting the icon right in here. You could do it by a quick search, or you could build a screener once you're in one of those topics. So here are some information on searching for banks. So I'm going to just pop out of here and go over to the database. And let's go home here. Okay. So here we have the home screen for the financial ratings database. And I'm just going to click on banks here. I apologize for the slowness of this, but I am working remotely, so I've got to go through my computer at work and then get out to here. So here we have, this is when you click on banks, this is the page that comes up. It'll give you a bank of the day. It gives you some banks that have gone through some ratings changes, and you could see all of the banks that have been through those rating changes, or just click one by one. Over here you have the gives you the ratings distribution of the banks, so it's showing all of the banks that are in that strong, excellent or good rated capacity. The yellows are the weaks, or I'm sorry, are the fair, and then over here you see the weaks, so the D through E. are the weak rated banks. So, excuse me, I recommend starting to build a screener. You can start that by just clicking here on build a screener or even clicking on one of these bars. So right now I am looking at the total universe of A- rated banks in the United States. I'm going to expand this just a little bit because I want the entire collection of these excellent or good rated banks. And as I mentioned, these are all of the banks within this ratings category within the United States. So I want to narrow that down a little bit. So I'm going to click on states with branches and then add some criteria here, because since I am talking to people in Illinois, I want to take that down to all of the banks in Illinois. And then I want to further just sort this a little bit better so that I'm looking at them from the highest rated down to the lowest rated banks. So now you can see you have all of these banks here. And let's just take a look at the Farmers National Bank and see what the summary page has to say about them. So here you have the information here on the Farmers National Bank, and right up front here at the top they give you information on why it received that A rating. So here we see it's recommended, it has an A rating. So why is that? Because they have excellent capitalization, their asset quality is good, their profitability is good, their stability is excellent. They appear to be a little weak in liquidity, and not really sure why, but I want to show you. If we come down here and look at liquidity, they have a liquidity ratio and hot money ratio, and I will confess I don't know what hot money ratio is, so this is a good time to go to the glossary and click over here on H for hot money, and here we have hot money, and then hot money ratio. So hot money is individual deposits of 100,000 or more, plus deposits received through a broker. They're considered hot money because they tend to chase whoever is offering the best interest rates at the time, and thus relatively costly and fairly volatile sources of funds. So again, the ratio, this hot money ratio, would be the percentage of the sort of the solid investments versus the ones who are just in there for the best rates as long as they last. So that's a good example of how you can use all of the information here in the database to learn more and understand the information that's being presented to you. I had never seen that term before, so I learned something today as well. So I'm just going to bounce back here to the, go one more. So here we're back to the summary page. You could click on a history of the company. You could compare it to, if there was other banks that you wanted to compare it to, you could certainly do that. You could do an industry comparison. But that gives you a lot of information. If you were to click here, click on report, then you would get a PDF of this information that you could, maybe you want to just file it away. You want to take a look at it, I mentioned earlier that you maybe want to do just a quick checkup on your financial institutions once a year. You could pull this up if this was your bank, do the PDF, print it out, put it in a binder, and then you have it to look at, and just keep track of them, year to year. Are they still financially stable? Are you comfortable with them and what's going on? Or is it time to make a change? So the credit unions, we're going to move on there. They are going to operate very similar to the banks. You're going to see the page is going to look uh, almost exactly the same, if not exactly the same as the bank page when it comes up. So here we have the credit union of the day, some that have had some ratings changes. And then over here we have the ratings distribution. And let's go ahead and build a screener on credit unions. So again, I want to just expand this a little bit to be the A+ through the B- rated credit unions. And then I need to add some criteria. This is going to be a little different from banks because banks, we looked at states with branches. With credit unions are uh, individual by states. So, you know, if I'm going to select Illinois, and so all the credit unions that come up for the state of Illinois, um, they only operate in the state of Illinois. They don't cross state lines. So that's where it's a little bit different, and that's why we have to separate them out here in the database. So again, I want to sort these so I have the highest rated down to the lowest rated within this A+ through B- rating. So let's take a look at the Chicago Firefighters Credit Union. That's A- rated credit union. And again, we see that chart. So tells us, gives us the information of why they received this rating of A-. Excellent capitalization, excellent asset quality, good profitability, their liquidity is fair, and they have excellent stability. So coming down here, again, we have this hot money ratio, which we looked up before. And so here's the information. It also gives corporate information. So if you wanted to check out their website, give them a phone call and ask them some questions there, you will be able to do that as well because you have this information available to you. And again, this is something you want to check on annually. If you do your banking with a credit union, then you want to just check on their stability and make sure that it's continues to be a safe place for you to have your deposits and do your checking. We're going to move on to insurance companies now. And again, this is going to look similar to the banks page. When it comes up, you get an insurer of the day. The difference here is we are looking at the universe right now of all types of insurance companies. So these, what are showing up as here, the ratings changes, these could be all different types of insurance companies. But this is Medical Mutual Insurance Company of Maine. They are the insurer of the day. But let's go in and take a look. We'll build a screener and we'll move on from there. So right now we're looking at all of the B-rated insurance companies throughout the United States. We want to, again, expand this just a bit and go A+ through B-. And now we're going to add some criteria. Now we've got to add a couple of levels of criteria. First thing we want to do is what kind of insurance are we looking for? So click on insurance type and then add criteria. Because it's right here, homeowners insurance. And then when you're looking at insurance, you need to look at licensed in. So I'm going to assume you all are in Illinois. So we're going to select licensed in, add criteria, and then the states are going to pop up. And we'll go ahead and select Illinois. And then I just want to make sure that I have these sorted. There we go. So we've got the B+ through the B-, or through the, yep, B+ through B-. So there's nothing in companies that provide homeowners insurance within the state of Illinois. We're really looking at B+ through B- in terms of that what we've dialed down into. There are no A plus or A minus or higher rated companies, uh, homeowners insurance companies within the state of Illinois. But let's look at Allstate. The summary page will come up and you can take a look. Again, major rating factors, a little different because of the way insurance companies are rated. Certainly we have the capitalization, but then there's something called reserve adequacy, profitability, liquidity, and stability. So a lot of this information here. And again, reserve adequacy, that is a term that you might not be familiar with. So let's look it up in the glossary. Click on R and we'll come down here. And here we go, reserve adequacy index. So it gives you information on that particular term, and then the number that they're assigning it and what that means. So I want to jump back to our presentation here for a few minutes, work our way through here. So we did a screener for a bank. We did and a credit union and insurance. And now we want to take a look at the Medicare supplemental insurance. So I will jump back over to the website. And we're going to click here on Medigap. And here it's going to ask you for a first name. You do not have to put your name in there. I would say type a letter in there. When it comes to the email, you do have to. It won't run without it, but I need to tell you that we're not going to collect your email address and send you stuff and just load up your spam mail. This is so that the program can send you a copy of the report that it's going to run. And it's something you would want to have. You want to have it for the future. And also the report's going to be anywhere from 65 to about 70 pages. So if you were in the library and ran this and then just wanted to print it out, I think libraries charge anywhere from 10 to 15 cents a copy. It's perhaps not something you want to do. And then just having it long term, so having it emailed to your home email address is a good idea. So I'm putting this in so that you can see, and then you can select age. I'm going to select 65-year-old female and put in the zip code and then select get report. It takes about 30 seconds for the report to run. I do have one already pulled up, so I'm just going to go ahead and come over here and grab this. So here is the report that results. So earlier when I ran this, I said Villa Park Public Library, a 65-year-old female living in Villa Park, Illinois. And then here's the report. This area from part 1 through part 2 is a lot of it's all boilerplate information, but it's all of the detailed information about selecting, which plan should you select, what does Medicare cover. It shows you where the gaps in coverage are, where you're going to need to fill in with supplemental insurance, and gives you some questions to ask yourself to make sure that you are selecting the right plan. One of the things that I will pull up here, see if I can get in the right place. Nope. Is a chart. Here we go. So here's the chart of the different Medigap plans, A through N, and shows you all of the different what is covered, so what you get. And one of the things that is important to note about supplemental insurance is that it is federally regulated. So If you end up selecting, Plan A, you can be sure that when you go in and look at the rates and the Plan A, everything that you see, every insurer that's listed there, what they're going to offer you is exactly the same. What you'll find is there's differences in the actual rates that they're going to charge. But within each of these plans, no matter who's providing that plan, it's going to be exactly the same. So that being said, I'm going to jump back to our presentation for a minute. This is a little clunky doing this back and forth, but just want to jump over here and some of the stuff that is in that report, but we'll do it from here. So Medicare supplement insurance. So when you sign up for Medicare, when you turn 65 and sign up for Medicare, you get your Part A and Part B right here. And what you need to know is that it doesn't cover everything that is associated with your hospital and your medical insurance. So you need to fill in that gap either with a Medicare Advantage plan, or you can choose a supplement insurance plan. So I wanted to just point out here the differences between Medigap and Medicare Advantage. So side by side, Medigap is original Medicare Part A and Part B plus the supplemental insurance. So if you choose a Medigap plan, you will pay higher premiums, but you won't have any copays. You're going to have a freedom to choose the doctors that you want to see. You won't need referrals for specialists. You will find that some routine services are not covered, such as vision, hearing, and possibly even dental. On the plus side, again, you can be covered anywhere in the U.S., and also 6 of the plans offer coverage if you're traveling abroad. Medicare Advantage, conversely, you will have lower premiums, but you're going to have copays. You may be restricted to a network of doctors. You may need referrals for specialists. You will, on the plus side, it may include extra benefits such as vision, hearing, and fitness. Again, on the negative side, outside of the service area, you can only get emergency services. So just something to think about. So a few secrets that we want to share, and I mentioned the one, this secret number one, I mentioned this previously, that all of the Medigap plans offer identical coverage, meaning within each lettered plan, so Plan A, Plan B, Plan C, within and all the way up to Plan N, each one of those plans, the coverage is exactly the same no matter who you purchase it from. So you're guaranteed that coverage, and now you only have to focus on who you want to buy that coverage from. So again, here's that chart that shows what's covered and all the information. So just a good thing to take a look at. The next secret is that as I mentioned, the plans are standard, but the rates are not. The insurance premiums can vary by thousands of dollars per year for the exact same coverage, and you could save that money just by shopping around a little bit. So one of the things that I wanted to show you, so if we take a 65-year-old woman living in Villa Park, and she decided that Plan G works for her because it has the right coverage and all the things that she just knows she wants to be covered by. So she could pay $3,102 for that plan, or she could pay $1,254. So big difference there in price. And the exact difference is over $1,800 a year. And then when you look at that over 10 years, that would be $18,000. So now we take a man age 68 living in Villa Park, and he's decided Plan A is great for him. So he could pay $2,835 for that Plan A, or he could pay $1,116, which is over $1,700 savings a year. And If you multiply that times 10, that's $17,190 over 10 years that he could save. So again, same plan, but wildly different prices for that. And I just want to illustrate that in the report. Oh, apologize. Here we go. So let's take a look at Plan A. Pull that up. So here we have, this is for a woman age 65 living in Villa Park. So Blue Cross Blue Shield of Illinois, B plus rated company, $900, or come all the way down here. Here we are. So still in the A plus through B minus rated companies. $2,555. Now you'll see in parentheses says tobacco. So those are for people, perhaps if they smoke or if they chew tobacco or something, they're going to pay higher rates for their insurance. But looking at just this, so difference of, you could pay $900 for this coverage, or you could pay $2,555. So that's that's an idea of where this report, it gets really, it's important, and it gives you a lot of information very quickly, and you can move on from there. So now we have a couple living in Villa Park, and they both are going to choose Plan G. So they could pay over $7,000 a year for that, or they could pay $2,697 a year for that plan. So huge savings for the two of them. $4,360 per year, and multiply that times 10 years, $43,600. So big savings, and worth the trip to the library to run that report. Secret number 3, safer insurers are not necessarily the most expensive. So those higher premiums don't mean that you're getting coverage from a stronger, more financially stable insurance provider. And the last secret is you get to make the choice. You can get more coverage for less. You can reduce your premium and balance the financial safety of your insurer with your choice of plan. So it gives you a lot of options, and you may end up not choosing supplemental insurance, but you can certainly have all the information available to you, laid out, and then sit down with your healthcare provider, talk to them about your what's your health history, what you can expect, and then speak to your insurance agent, and really figure out what is the best route for you. So great tool, and it's free. So just to reiterate, if you go to the Villa Park Library website, click on research, select digital reference, expand that or go to business, go down to business and expand it by clicking the plus sign, and then scroll down to the financial rating series. And again, you can do this at the library once they open again, and you certainly can do it from home any time of the day with your library card. So I appreciate your time today. I hope I was able to help you out in understanding how to navigate the financial ratings database. And if you have any questions, if I were there in person, we would certainly be able to have a question and answer time right now, but unfortunately that's not the case. So if you do have questions, please pass them on to your librarians, and they know how to get in touch with me, and we can get those questions answered for you. Thanks so much. Be safe and be well.